All right, so welcome everyone. I'm Felix Fry. This is my friend Robert Bendock. He is a former colleague. We worked together back at Swiss Bank O'Connor back in the late 90s, right? In the late 90s, long time ago, late 90s. Um, Rob has probably in the business a little bit longer than I am. So I would say close to 30 years.
Yeah,
Is that
pretty
right? Close to
close.
30 years. I started in 1995 and I was brand new and you were already rocking and rolling there a little bit. So I just wanted to get you on we always have great discussions. We have a good time. And as we talk, I thought, why not get this on camera and have people get a sense of what it was like in the 90s, in the
Right,
2000s, during
right,
the crashes. So we can have a number of these conversations to get people inside the investment banks. And I think there's this thought of what being inside an investment bank looks like, and everyone's evil inside this investment bank. And
right.
part of this is to show everyone that we're just normal guys. We had a job, we were playing a job, and a lot of things that you might think are not exactly the way they play out inside the investment banks. So Rob, thank you so much for being here.
More than welcome, Felix. Honored to be here and go back and talk about some things that we experienced, we saw, and more importantly, that most people probably will never see again, like a real trading floor where you have this dialogue back and forth and the flow of information, the arguments, the fight, all the things that made the trading floor truly a wonderful place to be at the time we were there. Yeah, there were fights. Yeah, there were name calling, and but in the end, it's like when the bell rings, it's over. You forget about it.
We have
Tomorrow.
some drinks. I gotta get some beers.
Exactly, exactly.
Yeah, that's right. That's right. So we had a call last week. We were talking about this GME, and I had put out some videos, really just giving my thoughts on where did Warren Kitty get his money? Because the last time I checked, it was only like it was only $40 million, and
Right.
he turned $53,000 into 48 million. And I have other videos using that number. That's why I knew 48 million. And then when I saw that his portfolio was upwards of $200 million, I thought, wow, what happened? How did he go from that to 40 something million to over 200? And I was curious. I was simply curious as to potentially how he got into this, or what he did to make that money. And that led me to some data. And from that data, I sort of pieced together that it was probably Roaring Kitty who made a lot of money prior to ever showing his account. So prior to ever showing his account, he probably scored in a period of under a month. I'm talking 3 weeks. He
Mhm.
might have made about $200 million. That got me to thinking, wow, that's interesting. And then the regulator comes out and says, we're investigating. And then I started thinking, well, if he was doing something, what exactly would it look like? Maybe I can elaborate for people, what has happened in the past, what will continue to happen in the future. The game plan doesn't generally change.
No.
It's always the same thing, just different characters. And so I put together another video showing what might be the plan, and have a couple more videos at work. But you are registered still? Yes,
Yeah.
yes. You have a
No.
lot of licenses. You have some more insights. I haven't been registered in a while. It's been about 7, 8 years now, and I wanted to bring in because I think there's a lot of frustration, rightly so. So I believe that either this is the greatest trade in the history of Wall Street, or it's something different. Okay,
Right.
something different. I'm not going to call it market manipulation. I don't know, frankly, but it's something different. And maybe there was social media
Right.
influence that
Mhm.
that added to this trade. But what was it? So I wanted to sort of express from the crowds what the crowd is thinking, and ask the question to you: how does Jim Cramer, other hedge funds out there, the short sellers that put out their research reports, and then maybe trade in front of it, buy options, buy put options in front of it, and cover on. How is all that different than what maybe Roaring Kitty has done? Do you think Roaring Kitty has done anything wrong? Where are the regulators looking? And just what are your thoughts in general? Because that's the frustration.
Uh, Well, I mean, I look back and see what happened in the first GameStop move. I mean, it was absolutely incredible. Number one, the stock went from whatever it was, $20 or $18. It got up to 300 and change. And needless to say, implied volatility exploded. I think I remember taking a screenshot
It's
with seven,
incredible.
it was $334. It's whatever, 332, 334. And the February 800 calls were $70.
Wow.
Think
And the
about
implied vol, I think, got up to in the weekly,
that.
say
800.
2 weekly, 800,000. Yeah,
It was
it
crazy.
was, it was great. That is insane. That is insane.
And
So
those
go
are,
ahead.
so you, yeah, those are moments that you really don't ever see. I mean, once in a blue moon, I think maybe twice in my lifetime, I've seen, obviously the first crash, it went parabolic in index, but I think the other one was maybe a currency related transaction where vols exploded. But the interesting thing is you have to go and you have to set this entire process up and you have to reverse engineer what happened. And when you think about it, okay, you can say, all right, was it a pump and dump scheme? Was it spoofing? Was it spreading false information? I don't think it was painting the tape and I don't think it was wash trading at all. But the definitions of market manipulation are, I mean, they're interpretive, right? You have to look at it. And
They're
from
not
what
clear, right? Do you have the actual definition? Do you?
I have one piece in front of me that says, the the SEC will interpret the recent social media posts as a potential violation of market manipulation rules. Now, when you go back, I think again, I've read this. I don't have the exact
Yeah,
screenshot in front of me, but did he ever really say GameStop?
right,
Did, I mean, the memes or the memes, whatever, they may have shown, the roaring kitty or hunching over the computer or whatever it was.
right. Did he say anything?
Correct. And as much of a believer in the rules and integrity of the market are incredibly important. But to think how this has to be thought out and how much work is going to go in and determine if if he did or he didn't violate any of the rules in place. It doesn't happen overnight. It's not going to happen for a month. I would bet that you're probably looking at maybe October, November to get a
I would
little.
say 6 months. Yeah, 6 months to a year. The one thing I saw that I thought was interesting, and I didn't recall it as I was looking into this stuff, but when I read it, I remembered being at the investment bank. I just remembered they would tell you certain rules, and there was this one rule that if you show your position, it takes everything up a notch, and you are supposed to then tell the crowd, the people that you are showing,
Mhm.
what you're doing before you get out.
Right.
And it's, I mean, this is one that is way down. If there's 50 books of regulations, this is like the last page of the 50th book. And part of it is probably by design, right?
Right.
Probably by design in order to grab onto something. And like everything else, they start putting pressure and they don't want, they're not going to go first to Roaring Kitty. They're going to go to the lowest person on the totem pole.
Correct.
They're gonna go to the kid on the corner selling, selling dime bags, right? And then they're gonna ask him, where'd you get this stuff? And he's like, oh, I got it from the guy who delivered it on a truck. Let's get the truck driver. And then the truck driver, I got it from this place, from the ship. Let's get the ship, and they're gonna walk this up to figure out what happened.
Yeah.
And then, like everything else, they go get statements because then if you say something that is not true, then they got you on that too. So they really methodically go through this process. And, he did not say he was selling those calls in mid-June.
I,
And that could be something that they can latch on.
I look at things and say to myself, okay, there are rules that state that if you're not going to be, just from the BD side or the institutional side, if you're not going to be involved in a block trade and you listen to, requests for quote or hey, I'm a seller of 800 or 2 million shares of XYZ.
Right.
I bid this. I bid 105.
Yeah.
And the trade's going to go up at 108, 110, whatever it might be. In spirit and cooperation, your hands
That,
are off that trade. You
yeah,
can't you
that's
shouldn't
not a
do
good thing
anything.
to
Right?
do.
You shouldn't say, "Holy cow, this is going to go in on down 25 cents or 30 cents in the hole. Let me go bang out some calls. Let me go
Right.
sell calls." No, you don't do that because that's a violation of the rules.
Right.
And I think what you just mentioned is when you look at the triangle, right? This is the upside down version, right? They're going
Yeah.
to go. and filter all the way down until they get to the point of really identifying if or if not this person was involved and what they did or did not do. And
Well,
this
one
is
thing, go ahead, go ahead.
no, no,
You
no, go
finish
ahead.
it. I was gonna say one thing that to me it's clear that if he bought options and bought stock, did whatever, millions of dollars worth of options, it doesn't matter. And he posted a meme
Mm-hmm.
with him crouched over looking at the screen, and the stock went up, and then it went up even more, and then it went up even more because he's posting a couple more memes.
Right.
I don't think I have a problem with that. Honestly, I really don't. I don't think in any of the means he's just saying he's cheering on something. There's never any ever talk. There's no talk of the stock like pushing the stock, go buy the stock. I really don't have a problem with that. I where it starts crossing the line and it gets murky is, was this planned? Was it planned prior? Hey, Rob, you and I, we're going to corner the market with options. Okay. It's going to start in 2 weeks. I'm going to signal to you when I want you to open your mouth and start telling other people. Okay. We're not going to talk until 6 weeks. This is
Yeah.
the last time we're
Yeah.
going to talk, right?
Right.
And you're going to do this on this date. You're going to watch my signal, and this is going to be the signal, whatever it might be, right? I'll put a flag outside of my window, and if you see the flag, that means it's on. Okay.
Right.
Step
Ready.
two is step two is this signal, whatever it might be. All of a sudden, with two people becomes a conspiracy, but all of a sudden, it becomes something that is planned, planned actions that have the goal of getting other people involved at higher and higher levels and creating excitement. That seems a little bit off. So again, if acted alone, put the memes, no problem. The minute you start adding these elements of other
In
people
concert.
playing different role in concert, playing different roles, okay, and just because you're not talking to them while it's happening, it was pre-planned. Again, I think, and then you look at the losses because the regulators are going to look at the loss. If nobody lost money, I got to tell you, they probably don't care that much, right?
People definitely lost money.
People got killed.
They missed opportunities, right? If you when we were talking before about vol goes up, right? It moves dramatically. You don't have an extended period of time to hold that position. And if all of a sudden you pay, let's say you bought, a 230 vol and this thing got up to 255, you may have only had 20 minutes or less until those options were sold or stock was sold against it or anything else that could drive down the value of what you had. So there's often a sense of, sour grapes, if you will. But
Sure,
the real message is if you want to get involved in trading something like this, you have to realize two things. Number one, most people, almost all people, either lose or barely break even. You don't find a lot of winners. You have people gloating about, what I did I made this,
sure.
but
The
I
majority.
we have to diminish it a bit because a lot of times people overstate what they really accomplished and
Sure,
understate what really went wrong for them.
sure,
And in this situation, I agree. I'm 100% in agreement with you. If it was something that was one individual, that's one thing, and then we have to go back and see how the regulators interpret how that information was brought forth to the public. But if you're a guy or a gal and you're sitting at home and you're watching this, and that is the impetus for you to jump on the keyboard or the mouse and click and buy something or sell something. You kind of got to take a hard look in the mirror and saying,
at what you're doing, right?
what are you doing? Right. Okay. Yeah, maybe you have
Yes,
a chance to make something, right? Maybe you do, maybe you don't. But we've both been in the business long enough when vols start to explode like that. If you're not already on the train, it's kind of hard to jump on midstream.
good.
Because,
Let's stick on this topic right here on on
yeah,
on on volatility. So very quickly, implied volatility is goes in direct relation with price. So you increase implied volatilities, the prices on the board on the options chain start increasing. If
right.
you lower the implied volatility, the prices go down. You could take a stock like Coca-Cola. Look at this, wherever it's trading, 50 something dollars.
Whatever.
The
Yeah.
at the money, the at the money straddle, the puts and the calls, add them together. Maybe for 1 month is $2. Let's just say $2. Maybe
Right.
that 180. If you go look at Micron 1 week straddle for today, I think it's $18, $19,
Right.
$20, and maybe I think it's let's say 12%,
Yeah.
13%,
Well,
14%,
of
whatever it
spot,
may be.
right? Of spot.
So you're talking about high volatility means that straddle is going to be worth a lot more. Low volatility, the premiums are a lot lower. Coca-Cola doesn't move that much. That's why it's low. And Micron or an Nvidia can move a lot. That's why the market is pricing them higher. So that's implied volatility. What we're saying here is that when GME starts this move, starts taking off, the implied volatility of the options, okay, this number, if you will, forget about the prices of each individual strikes. This number goes way up, and it's allowed to simply float, really, from what I've seen. And that is a way, okay, that is almost a signal to slow down,
Correct.
right? It's almost a signal to slow down. When it starts floating that quickly and that fast, in fact, that is defense being played by the market makers. So if we talk about, let's say, the biggest market maker, Citadel probably loses on that first big gap, even the second gap, they lose. Okay. And how they play defense as the crowd, I mean, you have thousands of people coming in at one time starting to buy options.
Faceless and nameless people, right?
Exactly.
From the standpoint of you don't know if it's a hedge fund, you don't know if it's a ultra high net worth person, you don't really know who it is.
You don't know
So
who it is. So what you do is you think about it as a dial, and the dial just turns, and they can go, you know what, let the machine decide where this implied vol, but we want it higher, and I don't want to be selling these things anywhere near 100 vol, 200 vol. Make it whatever they're willing to pay, really. And
right,
if someone's not thinking about it, they're just going to pay some crazy volatility level, which we said got to about 600, 700, 800.
right.
It
And
becomes almost impossible to win if you're buying options.
it almost, yeah, it's highly unlikely that you'll win owning or establishing a position at 6, 7, 800 vol with a week left.
And the
Uh,
second thing they do, by the way, just to add, is the bid offers go wide.
exactly.
So now you have, when you're first buying, it's $1 at $1.20, $1.15, $1, 10. Later on, it's 15 at 22. What do you want to do? It's
Right.
like a price discovery, and then the stock's moving up and down. And so it becomes difficult to get out as well.
And
So what are your thoughts on all of this stuff now that we're
yes. So let's we know we've seen it and we've experienced it firsthand. But the key things are okay. Volatility doesn't really need price movement to increase, right? It can increase because of increased demand, right, or increased social media velocity that comes in when people are keyboarding away.
sure.
Look at this, and all of a sudden the stock goes down and you still have call buyers. The stock goes sideways and you still have people willing to pay the offer. All right. So vols will shift once that behavior is determined and interpreted and saying, okay, here are our analytics that say this is now the beginning of a trend. This shows to us two things. Somebody that's willing to buy something 3 vols higher on a 27 vol name with the stock going down and it's a call. It's really an interpretation of somebody just trying to reach for a lotto ticket, if you will. And more importantly, just what you said, market makers are pretty smart and they're really smart.
Really
And
smart.
yeah, and the argument people have is that, oh, ABC market maker picked me off or XYZ market maker picked me off. No, you were the person or persons that decided to click that button. If
Yeah.
you didn't like it, if it was 150, 170, and you think 170 is a rip, bid 160.
One
Right.
thing I don't think many people appreciate, I don't think it's talked about a lot, but one of the reasons why the volatility goes up so much as defense, if you think about the position, so somebody comes in to start buying 50,000 call options way out of the money, there's very little delta. But the machines are going to pick this up. A human would pick that up. Someone just keeps buying these way out of the money call options. The human's going to say, and now the machine will say, there's a lot of risk up there if the stock actually starts moving higher. So My delta might be, which is the hedge, might be 2%.
Right.
Okay, on a model, the model says 2%. I might say, I've seen this game before. I'm going to be 5, 6% here. And if it moves up another, you know, 10% from
Right.
11 to 13, I'm pushing it to 15% because again, we've been here before. We've seen what happens. And so, and so on that initial move, the delta percentage goes up for the hedge, which means I have to buy. The next move, I have to buy more. And that's how the market makers need to buy stock. Now, once it starts gapping up the way it's gapping up, when you turn, when you turn, if you kept volatilities the same, the delta is going to go close to 80, 90, 100. So you're going to, it's basically going to say you have to buy millions and millions and millions of shares. Okay. That's what the model is going to tell you. Okay. If you're following the model, you're going to be buying all the way at the top. And then when it reverses, the model is going to say, it's going to quickly say, oh, by the way, 95% just went back down to 40 because it went way back down. You don't want to get caught in that as an options trader, as a market maker, because your head's gonna be spinning. Okay, you'll be buying all the way up and then on the way down. So what they do is they take this volatility and jack it up to 600 because the delta doesn't go up that high. It actually starts sticking at around 50, 55, and it gives them a little bit of some breathing room. Then they jack up the vols, they open up the bid offers, and they start collecting their money back. They make their money back. And I think it's in a way it's like insurance companies. Bad hurricane comes, insurance companies feel the pain, and then all of a sudden premiums go way up and they make it back over the next year, 2 years as the premiums are way higher. Same thing here. It's just they're going to get their money back. It's just, is it now or is it over the course of time by making wider bid offers or just really moving the IVs around, the implied volatility around on these people for the next 6 months?
Yeah, absolutely. And when again, when you look at this, there is part of emotion that goes into this, but the standard model is arithmetic, whatever formulas that they go through. And then the extra inputs, again, social media velocity, things along those lines. Volume increases are detectable and then processed. And it's really hard to be able to try and beat something like that, right? Like you're
It's
sitting
very
there,
difficult. It is very
you're
difficult.
sitting home on your computer, and like click, click. Oh, I just missed it. Click, click. I just missed. Oh, I
It
couldn't
is
sell.
very difficult. And just for the listeners too, the winners in this saga, if you will, were the early entries, the people who weren't first. There was different stages of this story. The beginning stage is where most of the money was made. They made it not just on direction, they made it on the volatility two ways. By the time the masses jumped in, they not only lost on the direction, they got into late, eventually the stock went up and then it came crashing down. They not only lost on the direction, they also lost on the volatility. So they lost both ways.
Ways, yeah.
And that's why they feel so much pain because their $8, $10 out of the money call option just went to $1, and
Right.
it's down 80%. So, that's something to consider as well for anyone thinking about jumping in. So what do people do if they are long stock? They woke up after 3 years and like, I'm still long this in my personal account. The thing's starting to move. What do you tell someone who's got this position on stock goes from 10 to 30, 40? How do you think about if you were, not that you were an advisor, but how would you think about giving them some direction?
Well, you've held on for a long time. 3 years is a fairly long time. I mean, in my opinion, in my I think maybe yours as well. But you hold on to that position, and an opportunity presents itself, and you have to have established in your mind where that range is, where that range. If you're thinking in terms of vol, where that vol is, or in terms of premium by strike, okay, I own the stock at 9 or 27, it got down to 10. Now it's back up to 30, right? And
Yeah,
I said, I promised myself, and I asked my creator, if it gets here again, I promise I'll sell some options. Those are the points that you have to stick to, because again, trying to have an emotional attachment to this and not looking at the logic and the math behind it, where it was, where it is, and what percentile it's in. is really the correct, in my opinion, the correct embracement. You separate the emotional aspect and you have the aspect of the time that you spent, the targets that you have, the absolute premiums that you want to have, or if you're a vol guy, the target vol that you don't mind selling. Um,
Yeah.
we've both seen it. We've seen things go.
I think you said something. Yeah, I think you said something very important. There's uh, trading, investing has a huge emotional toll on you if you are not prepared. If you're
Yeah,
not prepared, and I think that's the part that nobody teaches you, right? You don't really understand it until you feel it, and the this has taken on an emotional toll on people over the course of 4 years where they got trapped again or they lost money the first time and then I just got trapped again. How did that happen? Right. And I think that I think you're right. It's important to understand stop losses. It's important to and by the way, emotions run high, not just with the average investor, retail investor. You as well, I'm sure. I mean, when you're on the trading floor, it's not just people on the trading floor yelling at each other. When you're dealing with customers who are either getting beat on a trade or making a ton of money, emotions run wild. It's incredible to see the human experience when there's a lot of money involved. And I think next time we'll come back with a couple of good stories and maybe lead with that, with stories where emotions running high and what that meant. We'll lay out the scenarios
yeah,
and
sure.
add some players into it and allow people to kind of get that experience and understand the day to day of trading, sales trading on an investment banking floor back in the late 90s, early 2000s.
That'd be great.
Awesome. Thanks, Rob.
Thanks, Felix. Have a good afternoon, buddy.